How bad is it?
Well, it's a pretty pessimistic mood on markets, you got to say, Ros. So when the market opened, it fell by almost 3%. So in dollar terms, that's about a $60 billion loss for the Aussie market. It has recovered a bit from that, but not by much. So let's take a quick look at the figures first. So the All Odds and ASX 200 now down about 2.5%, which is still an extremely steep fall. So essentially, gains for over the past 4 days have been wiped out. And in context, a 2.5% drop, that's the fourth worst trading day we've had all year. And every sector's in the red, with mining and financial sectors being hardest hit. And it's pretty much red everywhere you look. Some of today's worst performers include Lithium Explorer, Lake Resources, gold miners, stocks in the local tech sector like Life360 and Zipco, which is the buy now, pay later firm. And only 4 out of 200 stocks actually rose today. And one of them is Computershare, which is bucking the trend with a rise of 0.7%. Now, the Australian dollar also had a pretty big tumble, down more than 2%. Overnight, it dropped from 69 US cents to where it is now, 67.3 US cents. And the pessimistic mood has also spread to Asia. New Zealand and Shanghai down 1%, while Hong Kong and Japan also had even steeper falls, down more than 2%. And all of this flowed from the US. So Asian markets and the Aussie market followed a very weak lead from Wall Street, Ros. Basically, Wall Street suffered its worst trading day since June of 2020 at the height of the pandemic. And it was due to some worse than expected US inflation figures, as you said. So as you can see, the Dow Jones down nearly 4%, the S&P 500 down almost 4.5%, while tech stocks bore the brunt of the sell-off, dragging the Nasdaq down more than 5%.
But why are markets so spooked by these inflation numbers?
Yeah, so the implication of higher than expected inflation in America means at next week's US Federal Reserve meeting, there's likely to be a supersized rate hike. So before today, economists were betting the Fed would lift rates by either a half a percentage point or 3/4 of a percentage point. So it's between a double and triple rate hike. But now that's been upgraded to either a 3/4 of a point hike or 1 entire percentage point. So it's either now between a triple and a quadruple rate hike, which is basically a sign of panic from the economy, the US Federal Reserve, if they were to hike rates by this margin. So here are the inflation figures which have caused this change in thinking. So you can see here that's headline inflation. In the year to August, that dropped to 8.3%, but still around a 40-year high. And economists thought it would drop even further than that. But it's the bar chart we should focus on. That's core inflation, which excludes volatile items like food and energy prices. That went up to an annual pace of 6.3%. So even though petrol prices have been falling in America, it's food, shelter and medical services costs that have increased. And this next table highlights just how severe the inflation problem is. So you can see that a lot of items have lifted at record rates. So you can see, for example, outdoor equipment and supplies in America, that jumped 13% over the past year, which is a record increase. Health insurance costs up 24%. So again, a record increase. So I guess the inflation has become more broad-based, and it's harder to avoid too, because it covers essential items and it's hitting, the poorest people in the economy the hardest, Ros. So I guess that means a more aggressive than expected rate hike coming from America next week, most likely.
OK, so it's bad in the US. What does this mean, though, for the Australian economy?
Well, the US is the world's biggest economy, so whatever happens there has ripple effects worldwide. So with a more aggressive rate hike next week, then that would strengthen the US dollar, and I guess it would probably weaken the Aussie dollar. And with that, it would also worsen the inflation impact here. Let's take, for example, oil prices. Most commodity prices are denominated in US dollars, right? So to buy more oil from overseas, you'd have to convert more Aussie dollars into US dollars, and that would lead to higher petrol prices here, which is something that we've become pretty reliant on in society as a consumer or as businesses. And that also will increase the price of jet fuel, which will make, airline inflation more expensive. And not to mention, I guess you got to consider the big picture, not just the US, but other economies are struggling. Europe looks like it's headed towards recession because of its energy crisis and reliance on Russian gas, which has been cut off in the past couple of weeks. The UK is pretty much heading towards recession. The Bank of England has forewarned that. And China's economy is slowing down drastically because of its property downturn and COVID zero policy. So with all those factors in mind, all those massive economies plus the US, that doesn't spell good news for the Aussie economy, which looks like it could face an economic slowdown if things don't go well overseas.